Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just an hour away, here's what you need to know. Joe Biden stumbles through exchanges while Donald Trump makes false claims as the candidates trade barbs on the economy, foreign policy and their fitness for office in the first presidential debate. We'll bring you analysis throughout the show. Traders pile into treasuries as data points to a slowing US economy. We'll preview today's reading of the Fed's preferred measure of inflation. Plus, Nike shares tumble post-market after the world's largest sportswear company issues a full-year outlook that misses expectations. We'll dig deeper into those earnings.
In the meantime, a quick check on these markets. Broadly, you're seeing futures in the green. The Euro Stoxx 50 higher by 0.3%. The FTSE 100 right on its heels, higher by 0.2%. You're looking at a 10-year at 4.30 over in the States. Euro dollar 106.91. Markets today starts right now.
Making sure that we continue to strengthen our healthcare system, making sure that we're able to make every single solitary person eligible for what I've been able to do with the COVID. With dealing with everything we have to do with. Look, if we finally beat Medicare
for illegal immigrants and bounce back jobs, a bounce back from the COVID. He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
Friday the 28th. Dates matter this morning, particularly birth dates. The age of Joe Biden, an issue overnight. That is the story this morning that everybody is focusing on. We talked yesterday about maybe this idea that this debate could shape this election. Last night, absolutely shape this election, Kriti, in a way that few people would have anticipated. It's top of the agenda this morning. Joe Biden stumbles seem to have had an impact, and potentially a big impact, on the way this election could unfold.
I think people are taking this much, much more seriously. This was, of course, a concern. The debate circumstances were already set for them to kind of prove that they are both healthy. Joe Biden at 81, President Trump at 78, I believe. They had to stand for 90 minutes. They couldn't stumble. They couldn't consult with their debate campaign team. And to your point, Biden showed that he couldn't. And off the back of it, already reports that the Democratic Party, seniors in the Democratic Party, are panicking.
I think some of the polling as well suggests that the public at large didn't think that Biden won on the night for what that matters. That it's going to be a long campaign, and these two gentlemen are going to be tested continually. In terms of actual policy content, it's not the top story. To Guy's point, it's all about how these men handled themselves, how they come across. But there were lines in there that, for those tracking the economy, had something to focus on. But, FX markets, bond markets, they moved a little, but not all that convincingly.
Yeah, certainly not enough to show that there's a clear, to your point, policy narrative. But this is, I think, going back to the concern of it's hard to map this out of who and what policy actually matters here because they're so divided from a polling perspective as well. Neither candidate has broadly been endorsed by the public, and this is why the foreign policy record for Joe Biden, for example, was very important. For me, it was the deficit story and how they plan on addressing it. It's the first thing they have to address, whoever comes into the Oval Office in January 2025. They both talked about tax policy, Joe Biden with tax hikes, President Trump with tax cuts, one saying the tax hikes on the wealthy are going to help fund the gap in the deficit. President Trump saying tax cuts are going to help incentivize companies to repatriate cash, and that's going to help stem the deficit. It was all in the context of the deficit, which is something we're very familiar with on this side of the Atlantic.
OK, talking at this side of the Atlantic, you look at this from this side of the Atlantic this morning, you're looking at a Trump presidency.
Yeah.
I think that's what most people will conclude as they wake up and kind of look at what happened last night and look at the polling data that Anna's highlighted. The other question I think people will be addressing is whether or not it will be Biden. And to Anna's point about people within the Democratic Party now beginning to panic a little bit after last night's performance, it is the 1st of July on Monday. Is it too late? Can they change this? I think that is going to be a very live debate.
And if they can't, vice presidents certainly are going to play a very interesting
role here. Much more important role here.
Yeah.
So Kamala Harris, what role is she going to play in this? How important will she be? Is she going to be a help or a hindrance to the debate? How will the Europeans see her as well, potentially as a candidate?
It would be unprecedented. And there is a real stigma around a one-term president not rerunning for election. And so there was a lot of pressure even the first time around that President Biden has to rerun. As for Kamala Harris, she has been broadly seen and broadly broadly polled that she can't necessarily hold her own against President Trump because of his broad-based support. And that's why, when it first came out to whether or not President Biden should even be in the running, those were the concerns that
Europe
came
is going to have to think about this a great deal. And it comes at a time when Europe is facing its own challenges. We saw new leadership elected last night at the European Commission. They are going to face a huge challenge in dealing with potentially a Trump presidency in the United States. The French government, what is that going to look like? And it's interesting that we saw the debate last night focusing on areas of the economy, areas of foreign policy, areas of immigration that are going to be really interesting in the way that they interact with this new US administration.
Yeah, that's certainly going to be to the fore. So we had the US debate, of course, we had the French debate, as you point out. Interesting to think about where the market is positioning itself. This is the last French debate before the first round. We're going to get the first round of voting on Sunday. I was looking at some of the detail here. Investors hedging losses with the highest level of put options for French stocks than any time in the past 2 years. We're seeing downside protection on the euro, the most in 15 months. So the market is nervous, and they're expressing that through some protection. So that's something we'll, of course, fold into our coverage. Let's bring in Bloomberg's Julian Ponthus, who's been tracking the French story for us. Julian, from the debate then, what stood out to you? What mattered?
There's a big contrast with the debate in the US, in that in France, it's fair to say it's no game changer. The polls were showing a strong lead from the far right. I don't think that's that's expected to change. We could see just a bit of more tension maybe as the prospects of the far right are brightening up. There could be some tension with Macron over the role of who really has control over defense policy, over foreign policy. But yeah, it's quite a striking contrast with the US, where you guys were saying that, you know, this could be a game changer. In France, it's not. We're still expecting, while the polls are expecting a strong lead after the first round on Sunday for the far right. The only question remaining is, you know, whether they'll have a relative majority or, you know, an outright majority, absolute majority in Parliament, which will allow them, well, to rule France in less than, you know, in 10 days or so.
In terms of how different the debate will be after the first round, if you take out Macron's party, and that's what the polling is suggesting, are we going to get clarity between the first and the second round in terms of how some of these policies are going to come together? How different will the picture look like in a week from now once we're through the first vote?
But actually, that's one thing that's at stake on Sunday, is whether Macron's party will be wiped out or not. There's a chance, you know, it's quite a crucial election for a lot of French voters. People are expected to turn out quite a lot. So, yeah, that's a real question. Will Macron's party, you know, will be completely wiped out, or will it remain still a seizable force? And the second thing that we will have to see is whether, you know, it's 577 different elections. The magic number is 289 MPs. And on Sunday night, maybe we'll have a clear picture that there's maybe a path for that absolute majority for the far right. And if that's the case, of course, there's a lot in terms of policy that investors will need to take in. By contrast, maybe the left and the far left alliance will do better than expected, and we'll get, you know, a significant chance that, you know, there will be a hung parliament, and that also has a lot of implication for investors. So, you know, I think a lot of investors will be very reluctant to take any risk over the weekend, and I mean, volatility on Monday should be quite something.
It's really something we're going to be keeping in mind. You talked there about the bond market as well. I believe Christian Lindner out of Germany as well, already calling out the ECB and saying it would be illegal if they did need to intervene at any point in the French bond market. Bloomberg's Julian Ponthus, we will leave it there. We thank you so much for joining the program. Stay with us, of course, because in the next hour, we'll be taking a closer look at that political upheaval and the market moves that could result from Macron's snap election call with Anne-Laure Kiechel, CEO of Global Sovereign Advisory, and Lorenzo Codogno, chief economist over at LC Macro Advisors. You also don't want to miss Bloomberg's coverage on Monday of the results from the first round of those French legislative elections. So there's a ton of geopolitics, of course, to price in. It feels like the markets may be taking a little bit of a breather until we get more information on that front. In the same vein, you have some corporates and a little bit of a corporate read-through out of Nike overnight.
Yeah, really interesting. The stock down 13%. It's already been down 17% over 12 months. So there was already a lot of nervousness about the story here. What was interesting to me is they'd made an attempt to go round the wholesalers by really developing their own channels. And then it's their own channels that let them down. So their own website, their stores, the app. Yep. Those are the areas they saw weakness in the fourth quarter.
It's really interesting. You see some of the airlines trying the same thing in the States. You look at what American did recently and struggled with that. And you're seeing this kind of story about going direct to the consumer not having the same traction that I think a lot of CEOs would have anticipated. They thought it was the secret
during COVID, didn't they, I think, when stores were shut. And,
we own... It's who owns the relationship, isn't it, between the customer and the brand. And the brands assume that they own that relationship, and I think it's proving to be a little bit more complicated than that. The read across this morning will be really interesting to see how it works, as you pointed out yesterday, into Adidas, into Puma. Adidas obviously on a hot streak right now with what's happening with the Samba story. Does that keep it going? Converse apparently are not selling. Air Force Ones are apparently not selling. They're two hot favourites in my household.
You lost me. You lost me after Adidas. Let's talk. The thing that stood out for me for Nike.
That was Guy's attempt to talk fashion.
I know. I do. Good effort.
I need some applause.
Like that was adorable. Let's talk about Nike in terms of the potential luxury read-through. Here's fashion for you, actually, because Nike did actually talk about some positive strength in China as well, which is new. And this is kind of why I pay attention to Nike, because of their exposure to China. If they're saying the opposite of what we heard last quarter, which is that China is strengthening, is that perhaps a positive sign for the luxury names that are so exposed to China?
Okay, I'm going to talk skincare now, just to really kind of keep...
Wow.
Yeah, you're on a roll.
Look at L'Oreal. What did L'Oreal say yesterday?
Yeah.
They said that China's a problem.
Yeah.
And if L'Oreal's saying that China's a problem, it's really interesting to see how that will ripple out into the wider expectation. The data out of China on the consumer front, very weak at the moment, incredibly weak at the moment. And L'Oreal just really reinforcing that. And I wonder if there's a read across this morning into luxury stocks on the back of that as well.
Yeah, perhaps the Achilles heel of a lot of these multinational companies. So that's going to be something we watch at the European Open. There's plenty else to watch for today's agenda as well. Data out of the States is going to be front and center as well. Personal spending and personal income data, as well, of course, that PCE, the Fed's preferred watch. UMISH consumer sentiment. Plenty of things tradable if you did not trade that debate. You also have the Iranian presidential elections, the EU Leader Summit, and then the central bank speak. Barkin, Daly, Bowman, Villeroy, all hitting the tape. But it really is that data, I think, that's the most tradable, coming up at 1:30 p.m. UK time.
Yeah, we'll get the PCE due out the United States. Before that, we'll get European inflation data for certain parts of Europe, at least for France and for Spain. We're building towards the broader picture, which I think develops next week. So there's certainly an sticky services inflation conversation that we can weave in.
I'm really fascinated to see how this data develops and what is happening in the different parts of the Eurozone at the moment in particular, and how the ECB's going to manage that. To your point, it's the services side. That's where the stickiness has been. Do we see any signs of that abating? Because there's certain you look at what's happening in the bond market right now. There are hints in the bond market that the bond market's worried that inflation is struggling to come down again, that they're worried that maybe this is going to be a problem, and that actually central banks, particularly the Fed, are going to have to push this one out. OK, UMISH consumer sentiment, as we discussed, plenty of opportunity for Guy to talk about skincare, fashion and appetite for all of the above. We started the programme talking about the US presidential debate that took place. We've now got images coming to us, live images coming to us of US President Joe Biden arriving in North Carolina. This post the debate, met by some smiles, it would seem, from his supporters. We will see how this goes down with the wider US populace.
Yeah, I think we're going to be keeping a close eye on it. It looks like he's making his way back to D.C. slowly. I'm not sure what he's in Raleigh for at the moment, but again, we're going to be keeping for any sort of notes and statements coming out of the White House, and of course, any commentary from the senior leaders in the Democratic Party.
Coming up on the programme, French leaders face off in the final TV debate ahead of legislative elections. We break down who came out on top and bring you the market reaction as we get it. We had a conversation with our colleague at the top of the programme about his takeaways. We'll bring in some guest voices shortly. Plus, EU leaders nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. We're live from Brussels. If you have questions for our guests, please get in touch. IB plus BBTV Go is the function to use on the Bloomberg terminal if you want to get in touch with our team. This is Bloomberg.
Welcome back. You're watching Markets Today. We are, 45 minutes away from the start of equity trading here in Europe, a little less than that. Europe finished at the lows of the US session. We're going to see, therefore, some potential pickup on the back of that, but it's all politics this morning. That seems to be the narrative out of the United States and out of Europe. Overnight, the US economy showing further signs of slowing. First quarter personal spending revised lower. Core capital goods orders also coming lower. Pending home sales dropping in May. Keep an eye on the housing market right now. There's a piece in the Journal this morning talking about peak in the market there, kind of serious concerns around what is happening around the US housing market. The next insight, of course, comes core PCE, 1:30 UK time. Bloomberg Economics expects the May reading to be the slowest so far this year. What are the implications of all of this when it comes to the markets? Let's talk about the data. Let's talk about the politics. Kevin Thozet, Portfolio Advisor at Carmignac, joins us. Kevin, let's start off with the United States and figure out what's happening here. How big an impact do you think that PCE data a little later on could have in terms of market pricing?
Well, PCE is expected to be trending lower than where it was last month. And that's kind of the disinflation story still moving forward, which should be kind of well perceived and well digested by risk assets. And we are still in this environment where kind of lesser good news on the economic front is good news for financial markets.
I'm sitting here, it's Friday morning, I'm sitting here in Europe, I'm looking at a weekend that has got considerable potential for turbulence. I've got the PCE data that's about to drop in the United States. I've got French politics that I need to factor into my thinking. How much risk do you think portfolio managers are going to want to be taking over the next few hours and days, thinking about Monday morning, thinking about that data print? What do you think people are going to be doing? Is Friday morning a morning to be sitting on your hands, do you think?
Well, that's what's been happening for most of the week, hasn't it? I mean, when I'm looking at some measures of risk appreciation in Europe, and namely what all eyes are looking at the spreads between those French bonds and those German bonds. They've been even coming slightly down over the past week or so. I'd be rather wary, and I think it's more morning to be buying some hedges, some protection, whether that's on those French government spreads, whether it's on credit markets spreads as well, because indeed the coming weekend is likely going to be coming with lots of volatility. Obviously, due to the French system, polls is not really the reality of what the National Assembly will be like, but we are very much likely to see the 2/3 of the French National Assembly being on, I'd say, both sides of the political chessboard.
Normally, Kevin, good morning. Normally, we wouldn't ask you just a question about what happens today, as it seems a little too sort of near term. But to Guy's point, it feels like we could be setting ourselves up for some volatility even just this afternoon, given we've had the US debate, which went as it did and revealed what it did. We've got the French election coming up, and only the first round, of course, and it's the first half ending today. Do you think the end of the first half and positioning around that is something that we're still to see wash out in markets, or is that all done?
Well, in fact, I think that the rally we've seen for the first half of this year, I don't think, and we don't see many, or we see many investors which have been on the sidelines. So I'm not too sure it would be prone again to profit taking. Again, this wall of worry is there to be climbed. I think the situation in the US is not that of Europe. Again, disinflation is well embarked in the US. Maybe a bit more upside risk on inflation prints this week and beginning of next week for the euro area. So that would be one. For any investors willing to take some risk, again, there's been a very strong wake-up call in the aftermath of the European election, and we are still kind of, riding this U.S. exceptionalism. And this is something which is likely we will tend to continue all through the summer before, indeed, U.S. elections are getting more and more traction.
Yeah, Kevin, thinking about the US elections coming, and I wonder, and also thinking, we've referenced inflation here a few times, is there inflation risk broadly attached to more populism, whether that's in Europe or whether that's in US policy? How do you look at the policies that lie ahead and the inflation risks we're running?
Yes, I mean, clearly there's a very strong risk there. I mean, if I'm looking at, summarizing the Biden program is what's the 2 trillion tax, half of it on corporates, half of it on higher net worth individual, to basically finance $2 trillion in safety net expansion. That's likely coming with inflationary risk. I would tend to say potentially with, I'd say, more acute recession risk as well. If I'm looking at Mr. Trump's program, again, a higher tariffs, whether that's 60% on China, 10% on the rest of the world, is likely to be inflationary. Likewise, lower taxes on corporates, on high net worth individual, likely to, again, feed some spending. Main question is what will happen on the regulatory front, because indeed, if we do get an additional lesser pressure or lesser regulatory pressure, this will potentially come with better productivity and higher potential growth.
So that's the trade perhaps going into, or at least the things to keep in mind going into November, the election. What's the trade going into just 2 months later when whoever is elected has to face that debt ceiling yet again? How do you position for that?
Well, on those fixed income markets, for those investors seeking some form of diversification or trying to benefit from some form of a potential Fed put coming up, we'd be keener to be buying those 2 to 5 years maturities. There's not much being priced in there in terms of expected rate cuts for this year, for the year after this. So this is most likely where I would say any form of more acute deceleration in the U.S. economy or lesser inflationary pressure would be felt. So that would be one part of the trade. Longer-term maturities, I would tend to think, were much more at risk. Why that is? Because of this inflation uncertainty. Those inflation break-even, what trending at north of 2%. Wouldn't be surprised again to see them 30 or 40 basis points higher than this over the coming quarters. So that's one risk on the longer term of the yield curve, and then comes all this fiscal spending I was alluding to. Again, that's true for the US. It's true for Europe as well. I mean, we can and we will see over the coming 2 weeks who will be elected or who will be winning, whether it be the National Rally, the New Popular Front, or Macron allies. But none of them is tackling the French deficits.
All right, very quickly then, Kevin, do you have a range? Going into year end, what's your range on the 10-year in the States?
Yeah, well, again, I wouldn't be surprised to see those 10-year maturities trending 25 to 50 basis points higher than where they are these days.
Okay, Kevin Thozet, Portfolio Advisor over at Carmignac. We thank you so much for joining the program. It's really interesting what he's talking about there in terms of getting 25 to 50 basis points in terms of the range. He's playing out the policy changes that are potentially going into the election. It feels like it's unclear whether that means there's a floor in yield or a ceiling in yield. How do we price that?
Yeah, I thought it was interesting. He was talking about inflation being driven by either Biden or Trump. Like both options are inflationary over in the United States.
Is it Biden? You sure? I just feel that the politics at the moment, there's such a high degree of uncertainty around all of this. Yes, both of them potentially could be inflationary. The potential inflation story out of Europe is being driven by the politics. The level of uncertainty around this story
is there uncertainty?
You don't think there's uncertainty this morning?
I think it's unclear. I think there's confusion. Yes, I think there's a lot of disappointment. Yes, I think for a lot of folks who
every
are saying
note
that
I've read this morning is saying they're going to be looking at this.
I think a lot of people may be taking Trump's policy agenda a little bit more seriously, I think, post this debate. I think that seems to be at least the message from the folks I'm speaking to. But again, there are plenty of sides to that trade. There's plenty going on in the States, plenty going on here in Europe as well. We're going to dive into the developments out of Brussels next. Stick with us. This is Bloomberg.
Welcome back to Markets Today. 30 minutes from the start of today's trading session here in Europe. Quick look at the futures picture then. Things look positive, actually, in Europe. European futures, Euro Stoxx 50 up by 0.5%. Actually, US futures also pointing a little bit higher. We might have some disappointment around some of the clothing-related names. I'm thinking about Nike and that stock in play, and that was weighing after hours on others within that sector. So we'll certainly keep an eye on that. We start something new on Monday. We'll continue to bring you run-up to the open coverage and coverage of the market open, but we start something new.
You guys look great in this picture, by the way.
We tried really hard.
We did try really hard. 30 minutes to go until the opening trade, and that is going to be our shtick from now on. We are going to focus on that opening trade. That is going to be what we're going to be bringing every morning. So we've got a little news of our own to share this morning. That show is going to kick off. We're going to be back downstairs off this temporary set. We've got a fantastic new set lined up. Yep. It's going to encourage conversation.
It's going to encourage conversation. We have a great lineup over these next few weeks. It is just the creme de la creme that you want to hear from investors to regulators to policymakers. You take your pick.
And the geopolitical cards have aligned to give us a load of news to talk about as well. So we have the French election to start with. We'll be in the midst of that, running up to the UK election on Thursday, the aftermath of that on Friday. So it'll be
how kind of Macron to think of us.
Yes, excellent.
The news gods have certainly aligned to deliver a great show. Anyway, we're going to start that on Monday morning. Make sure you tune in. The new show title, The Opening Trade, kind of does what it says on the tin. We're going to bring you everything you're going to need to know to start your day and build you up to that open of European markets. Let's talk about what is happening this morning as we build our way towards that weekend, because the pieces are beginning to fall into place in Brussels. European leaders gathering last night. They've nominated Ursula von der Leyen for a second term as president of the bloc's executive arm, the Commission. It's been a bumpy road, and there are still potential bumps along the road. How did it go last night? I understand there was a few testy little conversations that took place as well. The French and the Germans trying to steer things in their direction. Everybody else not quite so happy. Ollie Crook joins us now from the European Council in Brussels. So, Oliver, 3 jobs confirmed by the leaders. It's not over yet. And tell us a little bit about how we got there last night and the mood in the room.
Yeah, guys, so we'll just to recap what happened in the job. So it's as expected. The Ursula von der Leyen got another term as EU Commission President, Antonio Casas, the Council President, and Kaja Kallas to run foreign policy for the EU. And this obviously was the really sort of important deliverable here, guys, because they need to basically appoint those 3 jobs in order to hand out all the other sort of portfolios that exist within the EU. Notably, there was Meloni, who was very unpleased and made no secret about it, about how these jobs had been appointed. She was railing against the EU before she got here yesterday. And she abstained for the vote for von der Leyen. Orban, for his part, he voted against von der Leyen. And this is really the leaders that wanted to bring everybody together, particularly get Meloni on side. They didn't really manage to do so. I mean, Meloni, speaking after it, said, I think Italy needs to make its weight count. Italy will get what it deserves. And that throws us forward to the next step here, which is the vote in Parliament. Ursula von der Leyen needs a majority of those votes. She won by the slimmest margin ever last time, by only 9 votes. She would really sail through if she had the sort of support of the ECR and Meloni. She did not get that.
So what does that mean for them these next 5 years? Have the priorities changed?
Yeah, so listen, they also had to come out with their strategic agenda, which is basically the blueprint or the outline, if you will, for the EU over the next 5 years. If you want to take a sort of contrast for what we saw from 2019, the last time they put this out, I mean, that was really 2019 was the year of the sort of the election of the Greens. They did really very well. Climate was top of the agenda. Now what we're seeing top of the agenda, you may not be shocked to learn, is defense. And we had Ursula von der Leyen in her first sort of speech since the nomination, the confirmation, I should say, saying that the EU needs to spend 500 billion euros, €500 billion over the next 10 years in order to get that sort of security down. And Guy, as you alluded to, just one final point here, the sort of power dynamics within the EU post that election are getting really very interesting. You had France and Germany trying to jam some more things into that strategic agenda. The other member states batted away, said absolutely not. That is pretty rare to have the 2 biggest member states of the EU basically not having the power to get what they want to get done.
Interesting political manoeuvres there in Brussels. Oliver, thank you very much. Bloomberg's Oliver Crook, who's at the European Council in Brussels. Coming up on the programme, stocks to watch, including Nokia. The business has agreed terms in a multi-billion-dollar deal to buy a US telecoms equipment company. More on that next. This is Bloomberg. Welcome back to Markets Today. We are Oh, different maths this morning. 22 minutes away from the start of cash equities. We're a little earlier to this point of the show than usual, requiring me to use my brain. We see European stock futures are pointing higher this morning. US futures point higher as well. Let's talk about where these markets are with our Markets Live executive editor, Mark Cudmore, who joins us here on set for 2 minutes on the market. Mark, let's do that. There'll be other opportunities to talk more about the election story and how that plays in. But I want to ask you about, stocks edging higher, stocks going higher in the US. It seems US futures are higher. European futures are higher. Doesn't seem to be much of a catalyst for this just sort of climbing, and I'm not entirely clear why.
Yeah, I think you're right. I think we talked at the start of the week. What is the big catalyst of the week? And it was either the US election, which has been a bit of a catalyst, but not a major market mover. In fact, I noticed my team overnight were debating about how much of the impetus for the bit of dollar strength was around the election. Clearly, there was a little bit there, but it wasn't dramatic moves. So that was one of our big catalysts, the one that Kriti picked as the big catalyst of the week. It hasn't really moved markets. PCE, people aren't really particularly excited by. So there's not those major catalysts out there, which means we're going back to the backdrop default. And as much as people are hyped up about the many risks out there, until those risks materialise, the current environment is extremely bullish for stocks. We have okay growth. I'm not saying it's wonderful. We have dovish reaction function from central banks. We have abundant liquidity in the markets, and we have good earnings overall. And that means until those risks materialise, you've got to be bullish underlyingly. Right.
That's really interesting, isn't it? Because it doesn't take... So you're painting a picture of it not needing us to resolve any of those underlying concerns to move stocks higher. You don't need resolution of any of those worries to move stocks higher. That's just how they go, even without any resolution.
I think that's absolutely right. And some people say, but what about they're so expensive? No, a small cohort is really expensive. Most stocks are not that expensive. Globally, most stocks are definitely not expensive. Even in the US, there's the majority of stocks are not expensive. And so therefore, and when you take assets like credit are very expensive, and I think people aren't convinced about adding to duration with so much uncertainty around the election, which means Tina is back. There is no alternative. You've got to just keep on buying stocks until some risk materialises.
Yeah. Are you thinking there could be volatility today ahead of the French first round of voting? There seem to be a lot of things to be nervous about in the very short term, and it's the end of the first half.
Well, in a few minutes' time, CPI is obviously interesting, and then that's going to cause a bit of confusion about will that suddenly provide a little bit of relief just before we want to sell bonds. Really, that just might provide better entry levels. I am a little bit more excited about the French election, actually, having talked to some people this week. But again, there's just no certainty how to trade it. I think people think this could be more of a negative event than my complacency. Not immediately on Sunday. That's not necessarily the trigger, but it overall is a risk-averse event.
All right, Mark, don't go anywhere because you mentioned CPI. Let's get to a chart that caught my eye, specifically on PCE. Look, if the U.S. debate wasn't tradable, you've got plenty in the day ahead. That is perhaps the PCE, of course, top of mind. You can see it's a downward trend in the last couple of readings. So, Mark, my question to you is: are people ready for yet another data point in that trend?
Actually, it's interesting. I think people still do believe in the disinflationary trend. And, one of the things I met a bunch of traders last night and, talking about ideas. One of the weird things, someone said near the end of the dinner, 2.5, 3 hours in, we haven't even talked inflation yet. Why? And there's my fund, all we do is spend all day looking at analysing the trend in inflation. And then everyone was like, well, then what do they say? And they're they clearly believe in the disinflationary trend is kind of there. And everyone around the table was like, yeah, but they just think there's... The disinflationary trend is there to some extent, but there are just so many tail risks that derail that. And then where there's really binary debate is how much the fiscal stuff matters. Some people strongly believe that given what politicians coming in are going to do and the underlying fiscal concerns, that means that the underlying trend is for yields to just keep on going higher over the next couple of years. However, I will say most people push back on the idea of a Liz Truss moment for the US, no matter what happens.
So I'm assuming you spent most of the night talking about politics.
But it was politics. I mentioned this as I was kind of walking onto set to you in the break. I'm really excited about the US election now, but not any clearer how you trade it. It was so amazing to me. I don't remember US elections, maybe this is my memory, of where people have such uncertainty maybe around... seem to have such high conviction and yet seem to constantly doubt themselves and second-guess themselves. Traders generally don't make money about making predictions around corners, right? So you have a view and you tend to try, the most successful traders tend to marry their tactical views to their strategic views. So, if you're bullish, you might suddenly reduce your exposure to zero, but you don't suddenly go, I'm going to be really actively bearish even though I'm really bullish, because it's just very hard to trade that. What's weird is people are doing this around the election. The people who think that, Trump comes in, he'll be dollar bullish, want to be short dollar ahead of it, and then the people who think that it's the other way around, it's just weird. Everyone is basically second guessing themselves.
The other element that got thrown in last night was replacing Biden.
Yes.
people were clear. You sat down and you said people were worried going into this debate
Yeah.
about him stumbling.
Yeah.
That feels real this morning. How does that change the narrative? Does that change the narrative? Does that change the trade? There's lots of uncertainty. Would that provide clarity? Because the polls could shift dramatically with such an event.
So it's important to emphasize that two things. One is we had this long conversation about the US election before last night's debate.
Yeah.
So that's one thing. And second of all, I need to be clear, I'm expressing no views in this. I'm kind of passing on the political stuff. But the view in the room was that generally, so the views were quite divided, but is that Trump will lose if it's a candidate that is not Biden or Kamala Harris, but he will win if it's Biden.
Exactly.
And it was before the election, some people were saying the worry is, some people are saying, oh, if Biden does badly, well, then that's going to secure Trump's victory. Other people are going, oh, if Biden does badly, there's a chance for the Democrats to replace him with a candidate who can beat Trump. So now we've had that event. I'm curious, I bet you everyone's kind of changed their view again, because there just seems to be, people are so excited about it, but no idea how to trade it. What I did come away with, though, is that I think everyone, because of how they're trading, the US vote itself will be a binary moment. This does not feel like, even though I'm getting excited about it this morning, I think there are trades around the election advance, but they're not trades you trade now for the post-election result. So whatever you think will be the result, whatever you think the policies, everyone's actually trying to second-guess and trade it differently now, and they think that you wait till we kind of see what those policies are later on.
Okay, okay, that's interesting. I mean, we had a conversation with Kevin Thozet earlier on, where I asked whether the politics on both sides of the Atlantic risks inflation. And I guess it's back to your fiscal point about whether the fiscal will drive further inflation. And he set out a case where both Biden and Trump could be inflationary. Does that chime with the sorts of things that you're hearing?
I think everyone agrees that basically the policies around fiscal side are similar. Like, whether it's a tax cut or a fiscal package, whatever, no one's going to control the budget, and therefore there are many people who believe that means higher yields. Now, it's higher yields not just because of fiscal concerns, but it's also because, and you just mentioned this, Anna, is this idea that that's pro-growth, and therefore that pro-growth means helps the inflation narrative. But I think there's a general view that these are pro-higher inflation, higher yields for the longer term, and yet there's still people who want to be long duration now and think it's a great opportunity.
Very quickly, I want to continue the U.S. political conversation, but we are getting a headline on French June EU harmonized CPI rising 2.5% year over year. The estimate was 2.5%. If you look at the market reaction there isn't one, but we will see. I'm bringing you the data anyway, because this is what we do. I'm going to bring it back to the U.S. election, though. Were there replacements named in terms of who might have that ability? Because to your point, at least from what I'm hearing, there seems to be a story that when you're talking about pricing policy, the 2020 or 2016 roadmap may not work because this is his second term, President Trump's second term, if he does indeed win. Therefore, it comes down to his legacy. It comes down to how he leaves the country in 4 years if, again, he's elected. That may not be the same narrative if there's a replacement. I'm curious what you've heard in terms of the commentary.
There wasn't, and I think it's important. I'm talking to people who are very focused about how to trade it. Like, none of them are claiming to be political experts or deep in the weeds on politics. And everyone's very open about it. They're taking their guide from like betting markets, from other political experts. And so, but it's interesting how much that narrative has coalesced very clearly that most like Trump is going to win, and even we kind of did a show of hands who think Trump will win, and people were shocked because it was a lower show of hands than apparently every other round table, because nearly everywhere you go, it's Trump is going to win. And the reasons for why Trump won't win were mainly tail risk reasons.
It's about France. Monday morning, what does it look like? Let's say Macron gets knocked out. That's what the polling suggests. Again, how do you position for that? What does Monday morning look like, do you think? And how excited should we be about the volatility that could come with it?
So I guess earlier in the week I was like, how has it become a bad event because we've kind of priced it? I guess what I was forgetting is that in all previous rounds, when we'd gone into the second round, it was easy for the nation to coalesce around the non-extreme option.
Yep.
And that was gone from the far. Whereas this time it looks like could be, the coalition of the far left and quite some extreme elements of that,
Yep.
I think, and the far right, and therefore there are harder options. So if Macron's not an option, no one's going to be too excited about both options. I think there's a little bit of negativity, uncertainty in the first round, and I think that this is the first time where that uncertainty means that far right could actually get through the second round, so that's going to keep us jittery for the next couple of weeks. I'm still unsure how you trade it longer term, but people are kind of saying what the election has not changed the fundamentals too much in terms of the far right will focus on 2027, as you kind of made the point of the day, and therefore they won't be too extreme. But it has brought out the highlight that the underlying fundamentals of France are bad, and people weren't really focusing on that. So what it has done is gone, hey, France is a bad story. You should be looking at this bad story. So they're basically saying there's no way you can get bullish. Like, no one thinks the election suddenly gets it much worse.
So
but if there is a rally, you actually sell the rally rather than the other way around, is what I was kind of thinking earlier in the week.
Okay.
So that's the US, that's France. This all sounds like there can be volatility on both of these fronts, and maybe that's exactly what people, you know, in the markets want to see, because they get to make a choice and make some money on that. Thinking about the UK and the political story here, I mean, you've been here a little while now, Mark. There's just not that level of interest in the UK story. There will be next week, and we'll get into the results and we'll cover it intensely, of course. But from a markets perspective, there isn't so much nervousness because the options don't look as different.
I'm afraid to say that's the least interesting one from a market's point of view, just because we've known the result for so long.
This is great.
Well, it was funny. I was actually looking at my notes from the last macro roundtable I did back at the start of March, and in that notes from, like, this is 4 months ago now, people were going, you know, start being bullish to the UK because it's quite clear that Labour is going to win the election. And this was when we didn't know when an election was. They're just like, Labour will win the next election, and they're going to bring stability, and they're going to bring moderate policies, and it's positive. So they were like, you know, people, the consensus at the time was to start being bullish UK assets that they felt were cheaper and underpriced. And I was like, that's 4 months ago, and it kind of like, any different view? No. So macro-wise, no trades. There are some micro trades around certain sectors, but I'm not on top of that.
OK, Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore with us this morning to talk about what's going on in markets overnight and also conclusions from his trader dinner yesterday. You can get thoughts from Mark and the rest of the Markets Live team. MLIV Go on the Bloomberg terminal is that function that you need to use. Let's get stocks to watch. Joe Easton is here, of course. Joe, good morning.
Morning, Anna. So we're watching sportswear stocks once again as Nike slumped after market, with the company warning of a sales slowdown and missing on its full year outlook. Now, sales will be down around 5% in the year ahead. Analysts only thought they'll be down 2%. Now, a lot of this seems to be due to the direct consumer products like their website, with some analysts pointing to not enough new products, not enough new launches coming onto the platform recently. But it's the same old theme that we've seen from Nike over the past couple of earnings seasons, a couple of big drops for the stock in the US, and we would expect to see a bit of a read across in the European firms, particularly Adidas and Puma. Adidas has had a bit of a rebound this year, but more importantly, it's probably the retailers. JD Sports called sharply lower because they are one of Nike's biggest retail partners, and we might see a bit of weakness in Frasers Group as well, which owns the Sports Direct brand, of course. But JD really called sharply low. I'm seeing big declines on that on the Tradegate exchange today. Then we're also looking at these skincare and beauty companies. This is after a bit of weakness from L'Oreal very late in the trading yesterday. Now, L'Oreal, their guidance actually only missed consensus by around 0.5 percentage point. But it was the CEO's commentary around China that seemed to really hit the stock. He was very downbeat on that. And that is the biggest market really for them in terms of their growth, with Chinese customers snapping up a lot of their products recently. So we saw that drop. And we also saw declines in the peers yesterday as well. So Beiersdorf, which makes the Nivea skincare products, and also Reckitt and Unilever, big rivals in that, they all declined late in the European session today. We'll wait to see if we get a bit of a rebound or if they continue to decline throughout the session. We're also looking at Nokia. Now, they're doing a pretty big deal over in the US. They're buying a company called Infinera Corp for $2.3 billion, and that's what happened to the stock in the US yesterday. The US company Infinera up 18% because it is a pretty big premium. Now, Infinera does software and hardware for mobile phone operators. As we know, Nokia has actually had a bit of weakness over the past few years. If we look at the year-to-date move on the stock, it's got a bit of a rebound, I think of around 15%. There it is on the screen there, so up 15% year-to-date. But if we look over 3 years, it's really had a bad run given a slowdown in 5G spending. So the stock down 24%. That year-to-date gain not really made up much ground there, but this deal could potentially open up another avenue of growth for them. Keep an eye on Nokia in Helsinki today.
15%, that's not bad. To track the S&P, that's roughly what that has done so far this year. The Dutch market, the real outperformer in terms of the European picture, the French not. Joe, thank you very much indeed. Joe Easton joining us on the single stocks. So, what do you do this morning? You've got potential fallout from the US presidential election, presidential debate last night into the election. Do you sit on your hands? Do you wait to see if anything kind of comes out of that? You're worried about the French election Monday. Do you sit on your hands? Do you wait and see what happens there? PCE's coming up a little bit later on. The European inflation data thus far a little bit dull this morning, but we'll let that one go for just a moment. So what do you do? If you're a trader, do you trade this morning? Or do you just wait?
There's a lot of risks out there. I mean, are they all adding up to something a bit inflationary? We talked about various political options with Kevin earlier on. He seemed to be flagging that many of them sound inflationary. We got UK GDP data out this morning, only a touch higher than expected. But that seems to be what a lot of European data is doing at the moment. You know, pleasing people in that it's coming in a little stronger than anticipated on both sides of the channel. But that makes life harder for some of those monetary policymakers.
I think at this point it might just be a matter of checking boxes here. Box number one, is the U.S. data in line with the decelerating inflation, or are we seeing an uptick in any part of it, whether it's consumer sentiment, PCE, whatever? Box number two, do we see the yield spread widen between French and German debt? If not, okay, is that showing up in the FX market? It's just kind of going through every little thing, and I kind of feel like it'll just be a net market, not really much changing until
this morning,
June 8th. I was going to say, well, this morning and till June 8th, because there's so much to navigate.
I just wonder whether Monday morning is something of an event.
I mean, it is for us.
For European markets. Well, it is for us. I've got a great new show that's coming up, which is going to be fantastic. I can't wait. New desk. But I think it's going to be really interesting to see Monday morning whether the French market has fully priced. Yeah. And by extension, the European markets have fully priced the political risk. Yes. Coming out of the weekend.
I cited that figure at the start of the programme, downside protection on the euro, the most in 15 months. And you're thinking 15 months, is that high enough? I mean, the risks could be kind of big here, or at least the uncertainty and volatility could be big. Coming up on this programme, we will have the market open for you, of course. We are looking at futures that point a little bit higher this morning. This is Bloomberg.
Okay, 2 minutes to go to the start of equity trading this Friday here in Europe. European equities finished at session lows from a US point of view, and US equity markets then picked up the pace in the afternoon session. That's what we're pricing in first thing this morning. Looks like European equities are going to open a little bit higher. There's a few single stock stories that I think you're going to want to think about. The Nike effect this morning, I think, is going to be interesting into stocks like Adidas. It's going to be interesting to see whether there's a continuation as well of that L'Oreal sell-off that we saw last night.
Yeah, I'm really interested in where the retail sector goes, because it was the worst performing yesterday with the H&M numbers down by 1.9%. That features some of the businesses that Joe Easton was telling us, are linked to the Nike story. So, for example, JD Sports, that was actually a gainer in a retail sector yesterday that was selling off. So there could be some vulnerability there, some negatives around what the consumer is doing.
It's also the last trading day of the month, quarter, and half. Yep. We've had rebalancing flows kind of in this rotational flow that we've seen all week long in terms of sector story. I'm curious if it's just more of the same this time around. Is it really just a question of heavyweights or selling off what's been performing well? I don't know.
I wonder whether that's already washed out of the session.
Yeah, it could be.
Or already washed out over the last few sessions.
Yeah.
So we'll see. So we'll see how we trade this morning. We were building up to PCE data out of the United States a little bit later on. We've still got a few inflation prints that we need to factor into the European story as well. Politics is going to be front and centre, so we'll see exactly what that looks like. But at the moment, Europe looks like, to the point that we were talking about earlier, it looks like equities are going to creep higher.
And it does seem, what was interesting from Mark's conversation earlier on, it looks, everything about the US political story looks very complicated right now. And even if you have firm views on what happens, which is complicated to get to, how to trade them is another question, and how to trade them over a long period is an even bigger question. So we'll certainly keep returning to that theme. Markets then opening up in just a few seconds for this Friday trading session. Looking for European equity markets to bounce a little this morning. Just globally, equity markets do seem to be trending higher over the last 24 hours or so. Certainly through the Asia session, we saw a little bit of positivity. Not very clear what the catalysts are for a European session that goes higher this morning, but the FTSE is open and up by 0.3%. The Stock 600 up by 0.2%. The DAX also a little bit stronger, so we'll look to see what Adidas is doing in the mix there. Because is there a negative read across from Nike, or is this seen as positive because there's trouble for the competition and they do have different businesses in some meaningful sense? So we'll continue continue to watch that. But overall, European equity markets then bouncing slightly this morning.
Luxury's down, though.
Yeah.
L'Oreal is down again on the back of the move that we saw last night. LVMH is softening up as well. It's down by around 0.5%. That's adding some serious weight to the downside too. It's interesting to see stocks like Vestas and areas like that maybe seeing some weakness. I wonder whether there's a Trump effect in the European market this morning. The offshore wind market, the onshore wind market, potentially a casualty of his presidency, were we to see him coming to the fore. But the luxury names certainly are where the big weakness lies this morning. The market is relying on its firm favourites, Novo Nordisk and ASML, the two big winners from the first half, coming through quite strongly once again this morning.
A lot of French names in terms of the weighting contributors to the downside. And on the upside, a lot of commodity names, your Shells, your BPs, your Glencores, all higher and taking the index higher as well, alongside, to your point, ASML and Novo Nordisk. You can see some of that on the screen right there. Again, luxury and even Iberdrola thrown in there as well. But to your point about the energy space.
Oil up 14% in the first half of the year, one of the big performances to the upside. Actually a bit of a surprise. So that's been a trend that has been continuing. The first half has been fascinating in so many ways. The market's got narrower and narrower, particularly over in the United States. The S&P equal weight has underperformed the S&P by the most since 1999. What happened in 1999? Things got pretty interesting in 1999.
We lacked a little bit of breadth there as well.
Maybe
we did. There was something in the air there.
The party that didn't stop.
In the air here as well. I'm just looking at some of the companies related to Nike. We've got JD Sports down by 5% this morning. So, not the biggest name, but certainly of interest when it comes to where we see the read across. And I don't think there's so much read across into Adidas. So that's interesting in itself, really, isn't it? I mean,
the Samba story continues.
The Samba story continues, but it's taking on Converse and Jordan and winning, it would seem.
When are you going to buy a pair?
I'm not sure I'm really the ideal target market for a pair of Sambas, if I'm being brutally honest.
Rishi Sunak tried that one, didn't he?
Precisely. I'm not taking my style cues from him either, but let's just be clear about that one. But it's interesting that they've managed, that has seen them through, and the strength is definitely there. And it's interesting that Nike talks about product innovation and how quickly it needs to bring those products to market. Converse has not done well. Some of the more established brands that they've been relying on, Air Force Ones and the Converse story, just falling by the wayside. But this industry still feels so cyclical. Like kind of what's on trend at the moment makes such a big difference.
Let's talk to someone who knows. Nike shares fell in late US
You're
trading.
Saying I don't?
Well, I'm just saying I don't. Nike shares fell in late US trading after a full-year outlook that missed expectations. The world's largest sportswear company sees revenue declining in the mid-single digits in the current fiscal year, and that certainly weighed on the stock. There's the after-hours performance, down by over 12%. Our Bloomberg consumer goods reporter Dasha Afansieva knows a thing or two about these consumer goods companies and joins us now. I think we'll find Dasha. There we are.
There she is.
There's Dasha. Thank you so much for joining us this morning. What's going wrong at Nike then, Dasha? Let's start there before we think about any read across.
Morning. So at Nike, a few of the numbers were a miss for the last quarter, and of course that massive outlook downgrade. The chief executive, John Donahoe, wants to frame this year that we're in now as a turnaround year, but with expecting revenue to fall mid single digits, just sort of shows it's a very slow turnaround. And what they point to is their lifestyle, as you guys mentioned, the things like Air Force Ones, the shoes that we wear day to day, doing really poorly, particularly on the online channels. And they're also pointing to macroeconomic uncertainty. But as you said, it's these lifestyle brands that Adidas is doing much better on, and other brands are doing much better on, and Nike is just lagging behind. And for them, the key to turnaround is innovation. But I also compare it to other consumer goods turnaround stories, and they do kind of happen a bit faster because, yes, some of it is innovation and getting products quickly to consumers, but a lot of it is just marketing. And if you've changed your what Donahoe refers to as the story and have deeper stories, and if you're basically convincing consumers you're cool, if that tends to happen quicker. And it hasn't been for Nike.
Dasha, we're talking a lot about this morning about where China falls into this whole narrative. I'm looking it up on the terminal. Just the China story makes up about 15% of Nike's revenue. That is a bit of an outsized exposure relative to some of its peers. Where does Nike stand on that? Walk us through it.
Yeah, I think growth in the quarter is about 4%, which wasn't too bad and obviously above the average. But if you compare it to expectations for Adidas, it's much lower. And also, China's this quite volatile market in terms of geopolitics, because you had these years when international brands faced boycotts over there. So I think it could be worse, i.e. it could be like some of its other markets, but it's certainly not saving Nike, and it isn't kind of the solution. The solution appears to be to have winning products and to be able to compete in bits like running. So that's why Nike is launching a new Pegasus shoe this month, and they're saying that this is new technology and it's going to win over runners. But it's such a competitive space because it's not just Adidas; it's it's ASICS, it's Hoka. So we'll see if they can really convince the shopper to come back to Nike.
Is this a zero-sum game? If Sambas are selling, or Air Force One's not selling, if we're seeing Hoka coming into the market, does that just detract from what the Pegasus is going to be doing? Does the perimeter grow with these new brands coming back in, or is this just a pie that just gets divided up slightly differently? Is that the way we should think about the footwear market?
That's a really interesting question, because I think in this case, with these really trendy Samba shoes, and Terrace is apparently doing really well at Adidas, it does feel like even though you can have, 10 pairs of lifestyle trainers, it does appear like there are these hottest shoes that sell out, and it's very much driven by social media. And that does feel like a zero-sum game, and also something that's extremely volatile. So apparently, now on social media, people aren't talking about the Sambas anymore. They're talking about the Onitsuka Tiger shoes. These are the Kill Bill shoes that ASICS makes, the yellow ones. So you could totally see everyone just, this kind of herd mentality where everyone just runs to this other lifestyle shoes. And then, whereas Adidas, whereas Nike.
Anna's literally Googling these shoes right now, just to kind of make sure that she's on trend.
Those ones, seen those. I think I had some of these, years ago. Yes.
I remember these shoes from the Kill, but
I do remember these. Okay.
In fact, I remember you having some of these.
Nobody needs this in their Friday morning.
We're going to get matching ones for the Monday show.
Definitely not going to do that. Dasha, really kind. Thank you very much indeed for updating us and keeping us honest on the fashion story. The Olympics are coming up as well. That's going to presumably play into some of this as well. OK, let's move on. Let's talk about what is happening with the other markets we're going to watch. Luxury is under pressure this morning, and you can certainly see this in the Core 6. You've got LVMH down, L'Oreal soft as well this morning. But other areas, it's interesting, tech continues to outperform. That's where you go if you're worried about what's happening. ASML does fairly well this morning. Novo Nordisk does fairly well this morning. Maybe that's the place to run and hide when it comes to Europe. OK, let's talk about some of the other single stock stories. We've just been talking about what's been happening with the shoe story with Dasha. Let's figure out what the rest of the picture looks like. Joe's probably on the shoe story as well. Joe, over to you.
So we are going to start on the sportswear stocks, guys. Seeing a bit of a read across in a couple of those names here, including Puma, and also a bit of a decline in some of the retailers. We've got JD Sports and Frasers there. JD actually the biggest decliner. They are one of Nike's key partners in terms of the retail. And we also saw Foot Locker declining and Dick's Sporting Goods in the US. And JD has built a lot of new stores over in the US and done some deals there. So that does seem to be the key read across for that sector. Adidas actually holding up pretty strong. They've kind of got their own story going on with the rebound from the Kanye West debacle. But as I say, some weakness in some of the European sports names following that slump once again from Nike yesterday. Then we're also looking at those skincare and beauty product stocks following that warning that we had out of L'Oreal. L'Oreal actually continuing to come down after a decline of around 3.5% late yesterday. Beiersdorf, the Nivea skincare company, and also Reckitt and Unilever holding up pretty steady at the moment. They did all see declines, with L'Oreal pointing to weakness, particularly in China, which is the weight on their sales at the moment. I'm surprised to see it coming down once again. I thought it might rebound, but we're coming down on that one. Going to take a quick look at defence. We haven't looked at this sector too much over the past few weeks, but there is more reports around the situation with Lebanon and Israel and Hezbollah, all of those headlines. So we're keeping an eye on that sector at the moment. Not too much of a movement in those, but potentially that will be a sentiment indicator for the geopolitics. Once again, keep an eye on that maybe next week as well. Going to quickly take a look at Delivery Hero. A decline of one of the worst performers in Europe today. Surprise CFO exit hitting the wire a few moments ago. They've appointed an internal candidate. There was a report of the CFO going to move to Wise in the UK before, but this does seem to be taking the market by surprise at the moment. As I say, they've appointed an internal CFO replacement. Got a bit of M&A to bring you as well. Keyword Studios. This is in the UK. They're being taken over by EQT, the private equity company. Keywords does design for computer games. It supplies into the big games like EA and also Take-Two. Those companies are its customers. That is being taken out. It has been spoken about for a while. The other big deal, of course, is Nokia buying Infinera in the US for around $2 billion, being taken positively for Nokia. They do need to see a bit of a growth rebound given the decline in the 5G infrastructure spending. So that a bit of a positive. And of course, the US company was rallying after market. We'll wait to see where that opens up. Double-digit gains for that one. Finally, just one morning call, really interesting one today. Air France is downgraded over at Barclays. And look at that. We got a 5% decline in the stock. They're citing the French political turmoil. They say that disruption could be seen in their revenue, given the social unrest potentially. And also it might disrupt the talks with trade unions around wages, which has been a key concern. Barclays no longer recommends buying Air France KLM because of the French election. As I say, that one getting hit in Paris, down 5% this morning.
Joe, thanks very much. Joe Easton from our equities team with a comprehensive rundown of all the stocks on the move this morning. Coming up, we'll get back to the French election story. 2 days until the first round of French elections, and government debt and the deficits are in focus for investors. We'll discuss the market impact next. This is Bloomberg.
There are red lines. Sending ground troops is absolutely not requested, neither by Zelensky nor the Ukrainians. It's absolutely useless. President Macron proposed it, divided the Europeans, and worse, sent Putin some information he did not have, that Europeans are not prepared to send troops on the ground.
If Russia won over Ukraine, it would also be terrible for the daily lives of the French. Inflation would explode with the first cereal producer invading the second, energy bills would explode with more destabilization, and there would be a very significant wave of migration to Europe.
I won't let Russian imperialism absorb an allied state like Ukraine. So my position is simple: supporting Ukraine to avoid an escalation with Russia, which is, I remind you, a nuclear power. If tomorrow I become prime minister, no French soldier will be sent to Ukrainian soil.
France's three main party leaders squaring off in the final television debate ahead of Sunday's first round vote. We get a little bit more insight on what this means for the debt picture. Joining us now, Anne-Laure Kiechel, founder and CEO of Global Sovereign Advisory. Anne-Laure, pleasure to have you on the program. Thank you so much for joining us this morning. Before we get into the nitty-gritty of some of these spending plans, I'm curious about the sovereign rating of French debt to begin with. We, of course, know we got that downgrade from S&P lately to a AA. What are the odds, in your view, of another downgrade, not just to a AA, but even to a single A? What does that potential look like?
Thank you very much for this. I think you're asking exactly the right question, because when a country is in the AAA zone or AA zone, it's roughly the same kind of like investors that you're targeting, even if your cost is higher. So sliding down to single A would be not good at all for France, and a change of paradigm with regards to debt. It's very true to say that France is close to this, but I think it can be avoided. It should be avoided. And it's a question of managing extremely well the finances, managing extremely well the consequences of whoever party is going to be elected and what they will do, and communicating this very clearly with market and rating agency. So there is a risk, but it can be avoided.
It can be avoided, but if you look at some of the policy agendas, even in terms of a coalition government from the left or from the right, in France, there has been analysis from Allianz as just one example among many, many others who suggest that no matter who's in charge, the deficit will widen. In your view, is that a foregone conclusion?
No, it's not a foregone conclusion. It's true to say the deficit is extremely high and France is clearly really underperforming. It's also true to say that when deficit in France goes after 4%, it's bad because it then goes very quickly down, basically. So yes, again, there is a risk, but it can be contained. And also at the level of ratings that we currently have, meaning after the downgrade, we have room to maneuver in this rating category. So that's the reason why I think the single A is, of course, something that people need to be very careful about, but is not in sight, in my opinion.
Anne-Laure, if you think about another European country that looks like France in terms of its debt dynamics and its growth outlook, which country would it be?
Very interesting question, because actually none of the countries, because Greece, for example, is recovering. Italy, of course, has high debt, but has been overperforming France in a way. Spain has done extremely well, and it's very interesting to see, you were showing the graph of French debt. It's very interesting to see that actually Spain is trading extremely close to France. So it's a very particular case what France has. The growth is not that good. It's clearly better than Germany, but has underperformed South country. Deficit is, of course, very bad with regards to other countries. And when you look into the fundamentals of inflation, everyone is kind of like getting closer to the 2%. So it's reducing. So France is singling itself out in the economies.
How high would the spread between Germany and France have to go before you think we would be seriously worried? People are talking about 100 bips, maybe as being realistic, 120 maybe being possible. When do you think the market would probably should get nervous, should be worried? What would that number have to look like, do you think?
I'm not sure the market should get nervous because of this spread of delta. The reason why I'm saying this is that there are also technical reasons why this spread is increasing. Of course, it's the uncertainty related to France. That's very clear. But it's also because Germany has been less issuing than it has been in the past. So there is some technical element into this. However, you're right to say that 100 is a kind of like mark, right? And that people would kind of like pay attention if it's 100 or above. But I'm not sure that there is a specific number. I mean, it's much more the trend and it's much more the increase. So I guess what I'm saying is that if suddenly you are going from, let's say, 80 to 200, it's, of course, something that is very, very challenging. But obviously, the ECB would probably be intervening if there is that trend going on.
Anne-Laure, good morning. Bruno Le Maire likes to warn that France is in danger of a Liz Truss moment if certain other parties take charge in France. I don't think you agree with that, and you make the same point that a number of people have made, which is that the ECB will intervene. Just so I understand fully what that means, what would that intervention look like? Because when we had that famous Liz Truss moment, the Bank of England also intervened. So I wonder what it is that you think the ECB does in a French situation that sets it aside from what we saw in the UK.
Yes, thank you for the question on this, because the two situations are very different. First of all, in Europe, we already experienced spread that went up. It was in particular the case of Italy, and in this particular case, the ECB intervened. What does it mean? It means that, and this was the question before, at a certain level of spread of delta, and in particular between Germany and in the case that it was Italy, there is intervention, meaning that ECB would help buying in the secondary market. And as a result, because you have more demand on the bonds, you have the spread that reduce. So it basically shows, again, confidence in the sector. So it has been done before. It has successfully worked. And it has yielded results with regards to having the spread go down. So I would say, as it was done before successfully, this gives more certainty that we can do it again if we needed to, if this happened on France.
Okay, so the difference is that there's previous, that this has happened before, I suppose, because in the UK also that the Bank of England stepped in, which of course is interesting. I wonder more broadly, when you look at the proposals that the different parties are setting out, Anne-Laure, which do you feel you have more understanding of? There's more detail around and you can fully evaluate. Is that the left or is that the RN?
The left has come with a very detailed proposal and early in the process. Iran has been basically also dragging a little bit its feet when it comes to saying what they would do. And the numbers have been changing also because they've been changing their views, in particular with regards to pensions. So the most detailed is the program from the left. However, there are also some debate around how much it would cost. Same for the other program, Rassemblement National, and also same for the program of the current government. So the program of the current government is the less detailed because it basically says we will continue what we do with some small measures, but that doesn't really change the needle. You have a left program that is basically a Canadian moment and that truly believes that this would put the economy back on track. It says it's fully funded and it says it will bring growth. Hence, as a result, it will bring debt down. And Rassemblement National is basically saying and having a lot of says that they will work on VAT. It will cost immediate substantial amounts of billions in the budget, but that's what they think is needed to restart the economy. But that's one of the measures that they've kind of like have put a number on. The rest is much less detailed.
Well, Anne-Laure, I want to follow up on what Anna just talked about when it comes to the ECB and what role that may play. In the last 24 hours, Christian Lindner, the German finance minister, said it would be illegal for the ECB to intervene in some way when it comes to French yields. But what would that intervention even look like?
So you're right. Intervention needs to be precise. So what the ECB does, and as I mentioned in the Italian case, it has been done in the past, is that when delta of spreads between a given country and in particular Germany, but it's not always only Germany, can be other country, when it diverges too much, because we are a monetary zone, it needs to be intervening and making sure that there is no debt crisis. So as a result, what it does is that it helps the liquidity in the secondary market. And what it does is that it helps bring debt down. So there sometimes is a confusion around intervention or things that are done in the primary market versus in the secondary market. So I guess what he was referring to was probably something that kind of like has an impact on the monetary policy, which indeed Germany has very strong view about. But you can intervene and you can do and help in the secondary market, which has been done in the past and would probably be, if this is the case, but I personally don't believe it will be the case because I think it's still completely manageable around French debt. It's just a question of doing the job properly and talking to the market properly after the elections.
It's going to be interesting, though, isn't it, to watch it. Anne-Laure Kiechel, founder and CEO of the Global Sovereign Advisory, thank you very much indeed. Of course, don't miss Bloomberg's coverage on Monday of the results from the first round of those French elections. We've got some great coverage and some great guests coming up. Coming up, we're going to talk about something that's related, very related to this. EU leaders nominating Ursula von der Leyen for a second term as Commission head. We're going to discuss the challenges facing the bloc over the coming years. French politics, one factor in that mix. We're going to talk about this next. This is Bloomberg.
This is Markets Today, 30 minutes into a European trading day that shows European stocks moving higher. The FTSE 100 up by 0.4%. The CAC 40 is a real underperformer, down by 0.3%. So we'll continue to watch French assets, of course, as we head towards the first round of the election that takes place on Sunday of this weekend. We'll be back on Monday with analysis. Now, on to more immediate European politics. European Union leaders have nominated Ursula von der Leyen for a second term as president of the bloc's executive arm. Let's get more details from Bloomberg's Oliver Crook joining us once again from Brussels. Oliver, the top three jobs, they're now confirmed by leaders. It took some time. It took longer than expected, perhaps, over a couple of meetings. It isn't all over yet, though, I'm told. What's the story?
Yeah, that's right, Anna. So the top 3 jobs, we should just run through them quickly again, is Ursula von der Leyen reappointed for the Commission President, Kaja Kallas to run foreign policy, and of course Antonio Costa to run the European, the Council of Europe here. And these are sort of the main top jobs from which everything will trickle down and emanate. So it was really important for leaders to get this done, though this is not the end of the path. And we should say that there are some significant figures here in Brussels that were not too pleased about the outcome, namely the Italian Prime Minister, Giorgia Meloni. Have a listen to what she had to say at about 1 a.m. last night.
I do not support, and I have never supported, this agreement. Just as I announced yesterday in Parliament, I think this is a big mistake, and I find it disrespectful towards European citizens and their vote. I believe I respect the will of European citizens by not supporting this deal.
And so Italy, one of the biggest members of the EU, one of the founding members, abstained from supporting Ursula von der Leyen. Giorgia Meloni, Viktor Orban, for his part, voted against it. So these are some of the contentions that we have within this deal. And it's important because we throw this forward to the parliamentary vote that's happening in about 2 weeks' time here, in which VDL needs to get more than half of the MEPs to vote in favor of her in order for her to get that job. That would have been a lot easier if she had the support of Giorgia Meloni in the ECR. Now it goes down a bit to the wire. Last time, remember, she only won by 9 votes, the slimmest margin in history.
How weak is Emmanuel Macron now versus how strong he was before? How much of a difference is this election making to his standing in the room, Ollie?
I think it's making a very large difference. I mean, take one of the main issues that sort of Macron has stood for within the sort of debate here in Brussels, joint debt around defense. That has basically been off the table for this leaders meeting. This is not something that they really felt that they could even begin to talk about, in part because of how weak France is. We also know last night that at the last sort of minute, France and Germany came to the table. They wanted to make a number of amendments to the sort of strategic outline of the sort of European Union, what they call the strategic agenda, which is really the blueprint for what the EU wants to push forward in the next 5 years. If France and Germany come to the table with some amendments, traditionally speaking, that is something that member states listen to. In this case, not. They batted it away. They say, we don't want to take this into consideration. And basically, none of those amendments got through, really highlighting how important sort of domestic politics are right now in the EU. The question for Meloni is, how do you translate that power within her own nation into the EU level? That is what we're going to be finding out, particularly as Viktor Orban in Hungary take the EU presidency on July the 1st with the new slogan, Make Europe Great Again.
Oh, boy. Bloomberg's Oliver Cook in Brussels. We thank you so much. And kind of ending on the perfect note, because, of course, this is coming at the same time that we're coming fresh off of the heels of the U.S., the first presidential debate in the U.S., of course, hosted by CNN, President Trump versus President Biden. Let's just bring in an expert on foreign policy, on international affairs. Mark Champion for Bloomberg Opinion joins us on set. Your initial take on the debate?
It was kind of shocking, to be honest, especially the first part of the debate. It confirmed the strongest attack lines of the Trump campaign, which are that President Biden is too old to be president. I think it's very difficult to come back from.
You think it's difficult to come back from? So that sparks a conversation about how the Democrats respond, Mark, and a lot of different views about whether it's too late to find somebody else or whether that really is within the thinking and the gift of the Democratic Party at this point.
Well, I mean, obviously it would be extremely difficult, you know, for a whole range of reasons, including the fact that Biden himself would have to agree to make that decision. And it is very late in the game. But you know, there is it's certain the possibility exists that you have an open convention and other candidates put forward, and he steps down. You then have very little time, you know, to build that person up to beat Trump. But they may make the calculation that you know, they can't come back from this, and if they can't, there is not a great deal to lose.
So if you're sitting in a European capital this morning, you're thinking, I'm going to be dealing with a second Trump presidency. Is Europe ready, given the turmoil that exists here, for that? How should we be thinking about it? Is it a commission that we're building to deal with that? Is it a setup that is Brussels going to be ready for that? Is that the framework in which we should now think about European politics?
Yeah, I mean, you have had various, European politicians come out, in recent months to say, look, it's not like last time, we know what's coming, we're ready. I think that's a bit of a delusion, to be honest, because the difference between the preparation of the Trump administration last time when they had none and this time when they will, they've had a lot of time to prepare, they've got everything sort of worked out, including personnel, policy, and so on, is going to be very stark.
What does it mean for defence spending? It was clear, one of the things that did come out of last night was that there is a clear emphasis on defence spending. First, Ursula von der Leyen was talking about the need for Europe to do more. How is that going to work? How big does that number need to be? If we were to see a Trump presidency, how big does that number need to be? What does Europe have to deliver were we to see that Trump presidency coming through? And you fold in the Ukrainian angle into that, again, that number potentially just gets even larger than we were originally thinking about.
I think that's true. I mean, I think there's no question that he will come in demanding again that a lot more is done. There are still a number of countries that don't meet the 2% target. I expect that he will up the ante also, and it will no longer be about 2%. It will be more, perhaps saying you have to match what the US spends, which is over 3%. Obviously, that sort of changes the whole game. But that is part of a negotiation. Even Trump can't expect that overnight Germany will add 2% of its GDP to defense spending. It's kind of physically impossible and undesirable. But that will set the tone, as it did last time, and allow him to, make demands, other demands. I think the actual numbers, those still, always were and still are set by Vladimir Putin and his actions in Ukraine and elsewhere. Rather than Trump. That is kind of, more about his politicking and about him, mixing it in to make demands of the Europeans to, leverage in other areas like trade and just really to, as his former National Security Advisor Robert O'Brien said in a Foreign Affairs article recently, he would come back trying to show an America that works through strength and also unpredictability.
So I have a slightly left field question in that in one of the debate conversations was around China, though maybe one of the few times in the debate that was mentioned around China, where President Trump himself pointed out that Joe Biden hasn't changed much of the tariff policy during his administration. It's something Biden's critics have pointed out as well, that he campaigned on a softer or a better relationship with China, and it led to things like, symbolically, even getting our pandas removed from the Smithsonian and now reinstated, as just one example of what that relationship looks like. Taking a step back, though, there is this broader trend of the last three presidents we have, going back to the Obama administration, I'd argue even if you want to throw in Bush in there as well, of America pulling out of foreign affairs, whether it's getting involved in wars, funding various areas. I'm curious about whether that trend, if it's ongoing, of almost deglobalization and fragmentation, increases the chances for more hot war zones in places like the South China Sea.
Yeah, it's a really good question. I think, absolutely there is this trend, and that exists regardless of whether Trump comes to office or not, of U.S. withdrawal from, the U.S. was a literally global power. Yeah. So U.S. withdrawal from various areas. I don't think that impacts the competition with China and in the South China Sea. I think that, again, is a kind of cross-party consensus issue, that China is the primary competitor to the U.S. I think the difference for Trump when he comes back this time, which he may not really have got his head around, his advisors may not have, is that 4 years ago, the China, Russia, Iran, North Korea axis was really not extant in the same way that it is now. And so if, his goal, the sort of China first, idea in Washington is always that we need to focus on China, we'll park Russia, we'll park, these other issues. Now these things are glued together because of this axis, and it makes it, rather difficult to play. They won't be played in that way, essentially. and Trump won't be able to do that either. So it's quite, it'll be a different situation than when he was here last time.
Mark, thank you very much. Thanks for joining us this morning. Mark Champion, who covers international affairs for Bloomberg Opinion. Coming up on the programme, we'll turn to French politics once again. We'll discuss markets with a focus on France as we enter the last days of campaigning before Sunday's election. That's next. This is Bloomberg.
This is unprecedented territory in French politics.
Even if the National Rally makes it into government, it's going to be a two-headed France because the President Macron, will still be there.
The fact that Macron is extremely weakened, whatever exactly happens, so I think this is one of the few certainties that we have at this stage. That is pretty bad news for the EU.
We're already seeing that in Brussels. Is France diminishing both reputation but also influence?
Whoever will be in power will be constrained, in my view, by how the financial markets react.
We see that the electoral pledges of both far right or far left are evolving. So they do backtrack on some of their pledges, but we do still see fiscal slippage ahead. Rational people will prevail ultimately because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment.
Some of our guests talking about the lead up to the first round of the French election. That takes place this weekend. Financial markets largely appear to be comfortable with the idea that we get a hung parliament. That's what the polls predict at the moment. The markets seem to therefore be comfortable with that idea, at least. I say comfortable. They can manage that idea. There's also this hope that maybe if we do see the right winning, that Jordan Bardella will be more like Giorgia Meloni and will accept some of the conditionality that the market will impose upon it and will actually deliver a much more centrist policy than maybe originally anticipated. Is that what we should be expecting? Lorenzo Codogno, visiting professor in practice at the European Institute at the London School of Economics, has a great deal of history of analysing what happens in Europe, its politics and its economics. Lorenzo, fantastic to speak with you this morning. Should that be our base case? Do you think the market is right in assessing that actually the National Rally would probably be more like a Giorgia Meloni-style government that would actually, in some ways, toe the economic line and would accept the conditionality that the market imposes? Is that what you see happening here?
Well, first of all, my take is that the French elections are still pretty much open. In other words, you don't know what you're going to get after the first round because people might behave strategically and change their vote in the second round, depending how it goes in the first round. So I think it's pretty much uncertain the outcome at this stage. If it is an hung parliament, I think it might be problematic. Not only for France, because it would be a stalemate for at least a couple of years, but for European politics as well. Because if the French engine of European integration no longer works, then it could be a problem for any initiative in the future. So I think that needs to be taken into the big picture. Now, is Bardella similar to Meloni? I don't know. It is still to be seen, but at least on two counts, I would be concerned because the National Rally in France has been against NATO in the past and certainly not a very constructive attitude towards Europe. Meloni is strongly backing NATO alliance and the support to Ukraine, and has become much more constructive in terms of European developments. So unless we see a surprising shift by National Rally, I would be more concerned about National Rally in France than Meloni in Italy.
You talk about the EU implications, the European implications, Lorenzo. Is joint debt, is joint funding of defence possible given what is happening in France right now and the expected outcome of this election, which I appreciate is very difficult to call, but do you think that is going to be difficult to achieve? There is this hope in Brussels that we can see the Next Generation Fund being replicated in other areas. How possible do you think that is?
I think the Next Generation EU was a one-off initiative, a successful one, but very difficult to repeat, if only for legal reasons. However, there is certainly a very strong drive to find new initiatives to drive the European integration forward. Defense is at the forefront of this. There is clearly a need, and it is obvious to everyone, there is a need to kind of make it homogeneous, the kind of defense and security policy throughout Europe. So I think the need will not go away. The process will probably continue, but might suffer in the near term, because clearly, if there are countries that are not fully united and fully backing this process, the process might be delayed and might have to wait for events to push for that kind of solution.
Professor Codogno, good morning. Just picking up on what you said about Bardella and Meloni and the lack of comparison, or the ways you think that they are different around NATO views and views around the European Union and Ukraine. Were Meloni's views always as they are now? Were her party's views always as they are now? I'm just thinking about the way that sometimes views moderate when you're closer to power, sometimes they don't. And I wonder what expectations we have on that front when it comes to the RN.
I mean, you are absolutely right. When you get into power, things change, and you have to kind of shift to a more pragmatic approach. I think in the case of Meloni, that happened in day one, basically, effectively, okay? So that is reassuring. So maybe there is the same situation in France, but there is no guarantee, in my view, especially because if there is a hung parliament in France, National Rally will have to send some signals to their voters in order to prepare for the next presidential elections. And the only way to do that would be to kind of stick to some of the mottos in the electoral campaign, and so therefore it might be more difficult for the National Rally in a situation of a hung parliament to shift to a more mainstream position on very touchy issues such as support to Ukraine or common debt for defense spending.
Lorenzo, we're seeing the rise of the right, as we've been discussing, in some parts of Europe, notably not everywhere, but certainly in some parts of Europe. I wonder how a Europe that looks like that should think about a Trump presidency 2.0. What should Europe be doing with Europe as it is now? What should Europe be doing to prepare for the possibility of Trump returning as president?
This is a very good question, because clearly it will be the question in financial markets over the next few months. How would Europe respond to a completely different U.S. administration? And I think there are no clear answers at the moment. I think to some extent it is reassuring that at least there is some continuity in the Commission and in European institutions, that after the European election, things have not changed dramatically. So basically, broadly speaking, there will be the same kind of political forces supporting the policy initiatives in the future. But still, Europe is more divided, more fragmented, and that might be a weakness in the future, and might be a weakness in the potential response to any future event.
Thus squaring the political, and to your point, it is uncertain, but the policy agendas of the last two presidents have almost, at least on the international front, looked quite similar. Lorenzo, let's talk a little bit about the economics here. There are deficit questions on both sides of the Atlantic. In the States, starting in January 2025 with whoever is elected to this next term, but then also in France and the UK as well. How does that show up? How big of a concern is that?
I think it is a concern. I mean, financial markets are pretty relaxed at the moment. Risk premia are pretty low throughout the developed world and also in emerging markets. I think there is a possibility, which is not very high, but it's something that the investors should not forget, of a sort of debasing of the U.S. currency if the new Trump administration decides to go for big spending. and that undermines the confidence on the U.S. currency. I think it's not a high probability. Okay, I think the U.S. dollar is still the global reserve currency, and this is unlikely to change in the near term. But don't give everything for granted, because even the U.S. debt needs to be bought by someone in the future, and investors might be less inclined to do so. Moving to Europe, I think UK elections are a source of uncertainty as well, certainly for the potential policy of the new Labour government, but is less of a concern right now, I would say. The stability of the EU situation is more concerning, because clearly you need a united Europe in a situation in which you have so high global uncertainty, and you need a Europe that is united in terms of policy initiatives and ability to respond to any unexpected events that might happen in the future.
All right, Lorenzo Codogno, visiting professor in practice at the European Institute of the London School of Economics. We thank you so much for talking to us about the economics on both sides of the Atlantic. Now, on Monday, you do not want to miss Bloomberg's coverage of the results from the first round of those French legislative elections. We're going to be talking about the ramp up to, of course, the second round as well, the results from over the weekend, and the ramp up to the UK as well. There's plenty to digest, as well as our brand new show.
The big news.
The real highlight of the weekend, which is our brand new show. New desk, new set.
Yes.
Monday morning is going to be really exciting. I couldn't think of a more perfect way to start the show in terms of the news flow. We're coming off the back of the French election.
Yes.
So much to talk. I think there'll be news potentially over the weekend out of the United States. Lots of things are going to be happening Monday morning.
And to Lorenzo's point, it will be a little bit, well, it'll be made even more exciting by the fact that the outcome of round one of the French election, you don't get a winner at that point.
No.
So looking to...
You might get a loser.
You might get a loser. You might have people doing better or worse than... expected, apparently.
One thing, do you know what also we're going to do on Monday morning is we're going to have better mics, and we're going to make sure that the microphones are actually working. We will fix that on Monday morning. But the new show launch, we've got a whole series of new shows coming out on Monday, so it's going to be great to see the improved Bloomberg coverage. It's maybe some style over substance, because I think we are the substance. Maybe that's going to be good. But it's nice to see some style.
It is breakfast table conversation. What you need to know to kick off your day. What you need to know going into the market open. And of course, we have a great slew of reporters from around the world who will be joining us. The guest lineup, and of course, a big thank you to our producers as well for putting it all together.
We will be doing that on Monday morning. It's going to be fantastic. Tom's show's going to have a new launch. Fran's show's going to have a new launch as well.
We're shaking things up.
It's going to be fantastic. Make sure you tune in on Monday morning. That's it for us on this show. This is Bloomberg.